Hello, I'm Ananya. Welcome to Global Crypto AI Pulse. Today, we're uncovering a massive shift in global finance. Bullish, the digital asset exchange, has struck a monumental $4.2 billion deal to acquire Equiniti. This isn't just a purchase, it's a strategic move to build the world's most advanced tokenized securities infrastructure. To understand why this matters, you first have to look at Equiniti. They are a titan of traditional finance. Equiniti handles share registrar services for over half of the FTSE 100, managing corporate actions for the world's largest firms. They represent the literal pipes and wires of the traditional securities market, managing millions of shareholder accounts. Then there's Bullish, a crypto-native exchange backed by massive digital liquidity and high-speed blockchain technology. Bullish was built with a vision to bring the transparency and efficiency of blockchain to the world of institutional trading. By merging these two worlds, they aim to replace aging infrastructure with modern tokenized rails. The $4.2 billion valuation reflects the massive scale of Equiniti's operations and the projected value of its transition to on-chain. The terms of the deal indicate a long-term commitment to infrastructure, rather than just a simple expansion of services. But what does tokenized infrastructure actually mean? In simple terms, it's about putting stocks and bonds on a blockchain. It means real-time settlement, 24/7 trading hours, and a massive reduction in the middlemen required for every transaction. The efficiency gains are staggering. Transactions that once took days can now be completed in seconds with cryptographic certainty. The challenge is bridging the gap between old-world compliance and new-world technology. This is where Equiniti's expertise comes in. Equiniti brings decades of trust and regulatory relationships, ensuring that the new digital rails meet institutional standards. This is a global infrastructure play. They are positioning themselves as the primary registrar for the next generation of global capital markets. Regulatory hurdles remain significant. Authorities in both the UK and the US will be watching this integration very closely. Success depends on navigating complex rules around custody, ownership disclosure, and anti-money laundering in a digital environment. Bullish isn't alone. Wall Street giants like BlackRock and Fidelity are also racing to build their own tokenization platforms. But by owning the registrar itself, Bullish gains a massive first-mover advantage in controlling the underlying data and ownership records. We are seeing the institutional maturation of the entire crypto industry. It's no longer just about coins, it's about the very infrastructure of value. The Bullish Equiniti deal is a blueprint for the future. It's a $4.2 billion bet that the future of finance is on-chain. The massive deal between Bullish and Equiniti isn't just news for the banks, it's a direct win for you, the investor. Here's why. First, it brings the end of the 9-to-5 trading day. We are moving toward a world of truly 24/7 markets. Traditional stock markets sleep on weekends and holidays, leaving you stuck while the world continues to move. But with tokenized infrastructure, assets can trade every single hour of every single day, just like crypto, but with the backing of regulated stocks. This means you can react to global events in real time, whether it's a Saturday morning or 3 a.m. on a Tuesday. You're in control of your timing, not the exchange's schedule. Now let's talk about speed. Today, when you sell a stock, it usually takes 2 days for the cash to actually settle in your account. That's called T+2. In those 48 hours, your money is in limbo, locked away when you might need it for your next move. This new deal enables instant settlement. The moment you trade, the asset moves and the cash clears immediately. It's the shift from waiting days to waiting seconds. This liquidity is a massive advantage for any active investor. You can put your money back to work instantly, increasing your capital efficiency and reducing counterparty risk. It's faster, it's safer, and it's built on the same rails that power the biggest firms. Next up, your costs. Investing in stocks involves a long chain of middlemen, each one taking a small slice of your potential profit. Brokers, clearinghouses, and custodians all add complexity and cost to every trade you make. By using a digital ledger, we cut out the unnecessary layers. Less infrastructure means lower fees for the end user. These savings add up over time, allowing more of your wealth to stay exactly where it belongs, in your portfolio. Finally, this deal is about access. Currently, many markets are fragmented and difficult to enter from certain regions. Equiniti's reach across the FTSE 100 combined with Bullish's digital technology creates a global bridge for capital. It paves the way for you to invest in a wider range of assets, all from a single, high-speed, regulated interface. It also means more transparency. You can verify your ownership on the ledger directly with cryptographic proof. This is the democratization of high-end finance. Better tools, once reserved for institutions, are now becoming available to everyone. To recap, you get markets that never sleep, money that settles instantly, and lower fees across the board. The Bullish and Equiniti deal is more than just a corporate merger. It's the starting gun for a more efficient way to build wealth. The rails of the financial world are being rebuilt, and for the first time, they are being built with the speed and transparency you deserve. Stay informed as we track this revolution. We'll be here to break down every breakthrough for your portfolio.